Hello, guys. Hello, guys. How are you all doing? And how has your trading week been? So, for me, it has been an awesome week so far. The week of January 19 to January 23 has been an awesome week for me. Trade has been going well so far. So, today I'm going to show you guys how you can trade the weekly profile and especially how you can grab the midweek reversal. Midweek reversal. So, midweek reversal is a type of weekly profile. It helps you to know when price is going to turn in the middle of the week. The middle of the week is Wednesday. So, it helps you to anticipate when price is obviously going to turn and how you can catch these kind of price actions so that you can jump in and get yourself a one shot, one trade setup. So, I'm going to take you guys on a step by step guide and how to show you and I'll also expose all the hidden secrets inside the weekly profile. So let's move on into the charts. All right. So first of all, what we are going to do is look, this is the our bear charts and we are on the daily time frame. So before we even open up the charts, I will encourage you to go over to your economic calendar. So I may not be able to show economic calendar from here, but I am going to explain the economic calendar to you in a very simple term so that you can grab and understand what happened during the economic calendar. So stay with me while I load my Forex Factory calendar to see what happened during the week. So we are in the week of January 19 to January 23. So if you are in your economic calendar, you can see that Monday obviously is an empty day. There is no news. There is no high impact news. Tuesday, there is no high impact news. We have high impact news on Wednesday, 8:30. President Trump speaks. And we have another 8:30 high impact news on Thursday, January 22. Final GDP unemployment claims, core PCE price index, and a lot of things on Friday. So now, as a rule of thumb, there is no need for you to rush to make a trade on Monday. Why? Because I keep repeating this in every of my video because I want you to understand that on Monday, price does nothing. Monday is usually a Judas swing. Price is giving you a false move. So Monday is a usually false move. So what you need to do is you need to sit on your hands and wait for Tuesday and rest for the rest of the remaining week. The following days is going to tell you what will probably occur. So in this instance, looking at your Forex factory, you can see that Monday, there is no news, obviously. Even if there were to be a high impact news, I will not trade. Tuesday, no high impact news. Does that mean we will not look for setup on Tuesday? No. But we know that if there is setup on Tuesday, price will be sluggish because there is no high impact news. We have high impact news on 8:30 on Wednesday and the rest of the week. So we now head over to our charts to look at the chart and see how we can analyze this in simple formats. Here is our S&P 500. If you've been following me, you agree with me that I mostly analyze NAS 100 and S&P 500 and NAS 100 seems to be the pair that moves in the same direction. Yes, they always move in the same direction. You can see if we take a look at NAS 100, you can see how it moves. The same applies to S&P 500. So let's analyze S&P 500 in the way I usually do my analysis before I take a trade. So believing Monday has finished printing, so here is Monday. We name it Monday. After marking out Monday, what else do I mark out? I mark out Sunday opening because it helps you to know what price is doing. Where we are in the stream of time is price gravitating below or above. And also most times you need to make sure that you pick your entry below or above opening. It helps you to pinpoint a good trade. So Monday, we don't take trades on Monday. So what happened? Mark out where Monday starts, and we also mark out where Monday ends. So Monday usually ends Tuesday 12 o'clock. So this is where Monday ends. After Monday has finished printing, you need to switch to your 4 hour time frame, a higher time frame, to see what happened during the week. You need to switch to a higher time frame to see what happened on Monday. Switching to a higher time frame will help you to know what happened during Monday. So obviously, you can see the buy side liquidity here, the obvious buy side liquidity here, and you can also see sell side liquidity here in your 4 hour time frame. Now, what happened on Monday? This is Monday. This is a whole of Monday. So let me mark it out and write it so that you can really identify what happened. This is Monday. So this is Monday. So once you mark out Monday, you need to ask yourself, did price engage 4 hour time frame PDRA? What are the 4 hour time frame PDR you need to look out for? Sell side liquidity, lows or highs, fair value gap, and order block. For me, there are a lot of things, a lot of 4 hour time frame PDR that people look out for. But to simplify things, I usually look out for highs and low and fair value gap, and most times order block. But my favorite 4 hour PDR is fair value gap. Fair value gap, highs and lows. Those are the things I focus on. In trading, you don't need to focus on a lot of activities. You don't need to focus on a lot of PDRAs. You don't need to focus on a lot of things. You can get accurate, good trades with just few things, few strategies. So I focus on fair value gap, sometimes order block, but not necessary. Fair value gap, highs and low. So in this situation, using your 4 hour time frame, the 4 hour time frame during on Monday, did we see any engagement of a low 4 hour of a 4 hour PDRA? The answer is low because this is a low of 4 hour time frame. There was no engagement on Monday. Is there any fair value gap? Yes, there is a fair value gap, but did it engage on Monday? The answer is no. Because if you draw out this 4 hour fair value gap, you can see that there was no engagement on Monday. There was no engagement on Monday. So, what was price actually doing? Price was just, let's say, was just in consolidation. We can call this a high or we can call this a high. So, price was in consolidation. Now, there is no obvious high, so we take that out. Now, on Tuesday, obviously, you move to Tuesday. Since nothing happened on Monday, you move to Tuesday. Moving to Tuesday, we need to also mark where Tuesday starts and end. So this is where our Tuesday started, and this is where it ends. So we call this, let's write it down. This is Tuesday. So on Tuesday, using a 4 hour time frame, remember, using a 4 hour time frame, remember that price did not mitigate any 4 hour PDR. So on Tuesday, did price engage 4 hour PDR? The answer is yes. It engaged sell side liquidity here. So during after engaging the sell side liquidity, what is the next thing you need to ask yourself? You need to wait to see a change in state of delivery. Some people may call it CISD, change in state of delivery. Some people call it market structure shift. So anyone you want to call, you need to see that price has changed. So this was the market structure shift, sorry, this was the engagement, engaging the sell side liquidity using a 4 hour time frame. So this is the engagement. So in order for us to see if the change in state of delivery occur, we need to switch to our 1 hour time frame, and we need to zoom in and focus on that area. So after engagement, engaging here, grabbing liquidity here, if we are to expect a change in state of delivery, we need to look for the previous swing before this liquidity grab. And where is the previous swing? The last swing high. Here it is. This is the last swing. So if until price closes above here, until price closes above here, then our change in state of delivery is not activated. So your job is to sit to and wait till you see that price has actually closed above here. Then you will know, oh, the change of state in delivery has begun. Price is no longer going downward. It has decided to change to an uptrend. Why do we say, how do you look out for a change in state of delivery? First, you need to identify the liquidity graph, which is this. Now ask yourself, where is the last swing point before this liquidity grab? Here is the last swing point. Why do we look out for the last swing point? Because this swing point is what pushed price to grab liquidity, take out on the impatient traders, take them out. And where is the low? You can see this last low here, mark, which liquidity was grabbed, and liquidity was grabbed using a 1 hour time frame. That is Monday low, previous day low. Grab engage a 4 hour time frame low here. We expected price to close above here. The price close above here. The answer is no. So until price close above here, there is no need to enter a trade. We can see that price decided to keep moving up, and when it gets to this level, what did it do? It continued on this fair value gap and continued downward. So on throughout Tuesday closing, throughout the close of Tuesday, there was no other movement. So on Tuesday, we did not take any trade. So what will you do now? You need to move to the next day, which is Wednesday. This is the start of Wednesday. This is the start of Wednesday. And let's mark the end of Wednesday. So this is the end of Wednesday. So this is the start of Wednesday. So we are going to do it like this. Call this Wednesday. We switch to our 4 hour time frame to see what we're expecting. Now, Tuesday had a low. So you mark out the Tuesday low to the future. You can call that previous day low PDL. This is Tuesday low. We need to make sure that we always look out for higher time frame PDRs. Remember, look out for fair value gap, look out for lows, and look out for other blocks to see if they will be engaged within the week. Now, on a Tuesday, this was Tuesday low. On a Wednesday, what did price do? Price took out Tuesday low. Price took out Tuesday low. Remember, we are anticipating the midweek reversal. Price took out Tuesday low, kept going down, and what happened? You can see by previously in past, we can see this candle here. So price is reacting to this candle. You can see this candle. So price took out Tuesday low, grabbed liquidity, and what happened? Started gyrating upward. If you look at NAS 100, since they have the same price action, if you look at NAS 100, you can notice that engagement, this liquidity grab that occurred, price was reacting to a fair value gap here. So it is either you follow here or you follow S&P 500. So going back to the S&P 500, since I was analyzing that and I actually took trade on that, price reacted to this candlestick here. People have various names for different candles, but I don't care. So all I do is look at what price is doing, look at the reaction price is reacting. Now, when liquidity was grabbed with a 4-hour time frame, when previous day low was taken out, what next are we expecting? We are expecting to see a change in state of delivery, and we can only do that by switching to 1-hour time frame. This was our liquidity grab with this box. Now, if we are, let me take this out so that it will be clearer. If we are to look out for a change in state of delivery, what do we look out for? This was a liquidity grab. Look out for the previous swing that caused a liquidity grab, and this is the previous swing. That is a previous swing that caused the liquidity grab. This is the previous swing that causes liquidity grab. And until price closes above here, then we are not set. So if you see price closes above there, it means we are set for the new phase of price action. So you can actually see that 9:30 price closed above here, close above the swing point. What is price telling you? That on Monday we were going down, Tuesday we went down, Wednesday we went lower than Tuesday low, and we reversed. This is midweek reversal. So price is no longer going down, it has reversed. So this is midweek reversal, a kind of trading strategy used under weekly profile. So price on Wednesday reversed. Yeah, my entry was here. As you can see, my entry was here. So if you place your entry here, where will your stop loss be below this low? So what are we anticipating? We are anticipating that the week low, the low of the week has formed on Wednesday. So price has no business coming down here to form the low of the week. If this price goes lower than this low, then we are done for the week. There's no other trade for the week. We are done. So it doesn't mean that you've made a mistake. It means that you've executed what you see, expecting, anticipating that price will form a low of the week. So this is the low of the week. Price closes above here, above this swing point, signifying a new phase for the week. So price came, tagged us in here, and kept pushing up, kept pushing up. Here, you can actually see that price has made 2R here. So 43 points. And where will using fib 2, we measure where our take profit will be. Obviously I only do 2R, so this is 2R. But if you don't want to use your Fibonacci tool, if you want to measure your take profit, how will you measure? You also use a higher time frame PDRS to measure. So let's switch to a 4-hour time frame to see how we can measure. This is a weekly gap, a new week gap. So you can actually measure your take profit here. Or if you don't want to measure your take profit here, you can actually measure your take profits and tell yourself, oh, I just want to do 2R, or I only want to do 1R, Or you can also use your 1 hour time frame to try to measure